So, David, what are you expecting out of Mario Draghi just a little later? Is he going to have his dovish hat on?
He's probably going to reiterate what he has said recently, and that is essentially that he, along with the rest of the governing council, are happy with the economic recovery, meaning the economic growth we're seeing right now in the euro area. However, inflation remains very muted, and ultimately the ECB has a mandate to bring inflation up to its target. And as long as that's not happening, he's going to be cautious and not want to move too quickly toward the exit of quantitative easing.
Yeah, if we look at the data that we're expecting out later this week, there's an expectation we're going to see a drop in that inflation and in core as well. What is Bloomberg Intelligence expecting in terms of hitting the ECB's target? When is that going to happen by?
Well, that still remains a bit of a distant prospect. As you mentioned, we're going to see a drop in inflation on Wednesday when those numbers are out. But that's really just has to do with shifts we've seen from commodity prices and also the timing of the Easter holidays relative to last year created a bit of an effect there due to the volatile prices of package holidays, particularly in Germany. But when all that washes out, when you look at underlying measures of inflation, for example, one measure that the ECB looks at, which we've recreated in Bloomberg Intelligence, is supercore, and that's been unchanged for the last several months. That's about 0.9%, and that's about half the ECB's target.
Of course, their target is really for a headline number, right, David? I mean, they don't officially look at core inflation, and they do seem to expect to move towards normalization by the end of this year. In fact, doesn't the market expect at least a change in language in the June statement?
Right. A change in language is very likely. For example, the outlook to growth, the risks to that outlook will probably be changed to balance from being skewed to the downside. And that's really a reflection of the fact that the the recovery is gaining momentum and those risks have diminished.
What about the possibility of a continued taper? I mean, the ECB will tell you they're not tapering, but they have moved from 80 billion to 60 billion in monthly bond purchases. When do you expect that to get closer to zero?
So we expect that in September, the ECB will be happy enough with the growth outlook to make an announcement on tapering that would begin in January. And that essentially would probably take the form of a reduction of 10 billion euros per month through the first half of next year, which would bring quantitative easing to an end by the middle of next year.